Well, it's finally over. You know what I'm talking about. And we can get back to now just focusing on economics rather than politics. Basically, what's going to happen is that there's going to be gridlock. I'm assuming that the Democrats hold the House and that the Republicans hold the Senate. If that's the case, we're going to have gridlock, which means not a lot is going to happen. Let's dive right into it, shall we? Hey everybody, Courtney Smith here with our November 9th Wall Street winners. And this is our November 9th disclaimer. Okay, this is going to be a long Wall Street winners, all right? There's a lot to talk about. So here we have, you can see since the election, we've basically had a sharp rally, and now we've kind of run out of gas as we got up to those old highs that we made back at the beginning of September and in the middle of October. We also have lows, of course, that we made in late September and late October. So we have a gigantic rectangle formation. And typically what happens is in a rectangle formation, it breaks out in the direction of the previous trend. The previous trend was clearly bullish, so I would anticipate that we will break out to the upside. The only problem is that the volume is not confirming the formation, so it may not be a valid rectangle formation. Right now, we have to count it as neutral because we haven't broken out, but you've got to get your finger on the trigger there if it breaks out either the upside or the downside. In the meantime, don't do anything. But seasonality is bullish. The rectangle formation's probably bullish. You can see, and as I had mentioned to you in previous weeks, the smart money has bought aggressively here, and that's the purple predictor. It's making new all-time highs, and I think that that'll cause the stock market to do the same. Now, the Dow Jones, we finally got buying pressure back up above selling pressure, so that's a bit bullish. You'll notice that the rectangle formation is not as bullish here as it is in the S&P. Also, notice that the ADX, which is the black line, says we're in a neutral market. I think that falls into the duh category. NASDAQ, let's break this down a little bit. I really have been focusing on how strong the purple predictor was. As the market dropped, the purple predictor was staying the same, showing that smart money was buying the dip before the election. Since the election, look at that, 2 gaps up. That's very bullish price action. Very bullish price action. So we've got the purple predictor making new all-time highs. We've got 2 gaps up, very bullish price action. And we're making higher lows. Now we still don't want to be an aggressive buyer until we break the high that we made at the beginning of September. Once we break that, which I expect we will, then we need to be very aggressive in the market. Okay, seasonality remains bullish for both Utes and for the stock market. I'm raising my change level up for both of them to the lows that we made a week and a half ago. So what that means is right now, you should be putting on positions in the stock market 50 to 100% larger than you normally do. But if we break below that red line there, then we'd stop that. We'd go back to normal size position. Same thing on the Utes. We remain on a bull signal on the Utes, but I've raised the turnoff signal down to just above 61.5 on XLU. But nonetheless, we should be putting on big positions now, not small positions. Seasonality. Now, this is really interesting. The green line was the seasonality with a sitting president running, which is what we had. But the sitting president, he's going to be president until the end of the year, there's no question, and he will do as many things as he can before January 20th. So I think we want to stick with that seasonality, although we could also look at the blue, but they're both basically the same. So they're both also calling for strong price action, maybe a little dip in early December, and then we close the year on a high. I think this is exactly what's going to be happening. Asset allocation, They're taking money out of bonds. They're willing to, they wanted the safe haven of the bond market. Now they don't. This new money is helping support the stock market. The RISKDICATOR moves to a new high that we haven't seen since near the beginning of the year. Slowly but surely, the market's going back to normal and getting out of its COVID coma. Global shares move to new all-time highs. Look at that. Gaps, new all-time highs. Very bullish price action here. Now, they just barely made new all-time highs, but nonetheless, that's a very good sign. Yield curve keeps creeping higher because long-term interest rates are creeping higher. Short-term interest rates remain nailed to a piece of plywood. That's how the Fed designates that they want zero interest rates. They nail them to a piece of plywood on the outside of the New York Fed. Yeah, it's amazing. It's amazing. Anyway, so I think this is the Fed is basically kind of slowly letting the free market do its thing as far as long-term interest rates. This is slowly getting bullish. Bond market under pressure again. It popped up there in the middle of the week, and then now it's starting to come back down. Bond key factors all suggest that we should see higher interest rates. The dollar is starting to crap out. We haven't talked a lot about Biden's policies, but one of his policies will be to devastate the dollar. His policies are all anti-dollar policies. And he's going to want a weak dollar to try to find some way to stimulate the economy because his policies are anti-growth. So look for the poor economic growth in the United States to return, or to really become very clear, I should say. And that's why the dollar is selling off right now. Now, if the dollar's selling off, that means it's time to buy gold. Here we had a gigantic triangle formation, maybe a pennant formation. Volume confirmed it, so that's fantastic. And we just broke out of that formation, and we broke the highs that we made in October. So there's lots of resistance above this market, but we've got to start buying gold again, okay? Now, if you're not a fully paid up member, you should, because we have about 5 new gold trades this week, because this is going to be a place where I think we can make hundreds of dollars per ounce on the gold market. Gold key indicators, you can see the bottom one and the top one are pretty sparkly to the upside. The one in the middle has started to move up recently, but not long enough or strong enough to count it as bullish, but still, at least it's hooking back up again. Crude oil, as I say, with Bidenomics, we're going to have a weak global economy. It's important, the major driver of the world's economy is the United States. It is the biggest, most dynamic economy. There are other economies that are big, like Europe, but they're not dynamic. Japan, big, not dynamic. So nobody cares. The other big dynamic economy is China. But China is really, in a way, a derivative of the United States because it relies a lot on American direct demand or indirect demand for goods. So the two countries that I focus on right now are the two big dynamic countries, the United States and China. The other ones are steady state. They're just going sideways, so they don't really affect anything. But with a weaker U.S. growth prospect, we're going to see crude oil start to come under more pressure. And we could see it go down to around 30 or into the high 20s again. So the Saudis and the Russians and everybody, they cannot add to production as they plan. They're going to have to keep it where it is now at around 90 million barrels a day. Bitcoin, we told you, I'm not long Bitcoin, but I told you I was bullish on it. We've gone and made a new higher high. We've gotten up almost to 16,000. I told you to buy it when it broke the 12,500 level. So that's a nice 25% gain if you did that. I didn't, but hopefully you did. All right, freebies, thanks very much. You really, with the situation the way it is, you really need to be a subscriber to Wall Street Winners. Now that the election is over, things are much clearer about what we need to do, and I'm getting much, much more aggressive starting this week in the market so we can make a lot of money here. All right, freebies, talk to you later. Fully paid up members, hang on just 1 second. Lots of changes here, lots of new trades. We'll talk to you in a second. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature, that's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.